Have you ever looked at a screen full of financial data and just your eyes glaze over? It can feel like you're trying to read a completely different language. But what if I told you that you can learn to read it like a story? Well, today, we're going to do just that. We're going to translate these numbers into a clear narrative about where a company's been, where it is, and where it might be headed. Okay, at first glance, this is just a wall of numbers, right? But believe me, hidden in all that data is a really dramatic story about 3 different companies in the coal industry. By the time we're done here, you'll have the key to unlock that story. You'll be able to see which one's the giant, which one's the up-and-coming challenger, and which one might be struggling to survive. Let's dive in.
So what's the secret to understanding all this? It's a technique called peer comparison. And the idea behind it is actually super simple. You never look at a company in isolation. You always compare it to its direct competitors. Why? Because that gives you context. And in the world of finance, context is absolutely everything. It's how you figure out if a company is a leader, a challenger, or if it's falling behind the pack.
All right, so to read this story, we first need to learn the language. We're going to break down some of the most important columns you see in this table one by one. Think of these as the key vocabulary words you need to know to really understand the company's health and performance. First up is market cap. This one's the simplest. It's basically the total value of all of a company's shares put together. You can think of it as the market's price tag for the entire company. A really high market cap, you're looking at an industry giant. A low one? Well, that's a much smaller player. This is our first big clue to a company's scale. Next up, the P/E ratio. Now, it stands for price to earnings, but honestly, I like to call it the hype meter. It tells us how much investors are willing to pay for every single dollar of a company's profit. So, a high PE suggests investors are really excited. They're expecting big things in the future. A low PE, on the other hand, could mean it's a hidden gem, or it could be a sign that investors are a little skeptical about its growth. Dividend yield is pretty straightforward. You can think of it like a little thank you gift from the company to its investors. It's a slice of the profits paid out directly to shareholders. A higher yield means you're getting more cash in your pocket just for holding the stock. It often points to a mature, stable company that's consistently making money. Okay, this metric is all about what's happening right now. Quarterly profit variation tells us if a company is on a hot streak or maybe hitting a bit of a rough patch. Is it surging ahead or has it stumbled recently? This single number gives us a really powerful sense of its current momentum. And finally, we've got ROCE. I know return on capital employed sounds a bit complex, but the idea is actually very simple. It answers one critical question. How good is this company at turning money into more money? It's a key measure of how efficiently the whole business is being run. And, a higher ROCE is almost always a great sign. Okay, we've got our vocabulary down. Now for the fun part. Let's go back to our 3 companies and actually read their story. By applying these metrics we just learned, we're about to see just how dramatically different their situations really are. Let's kick things off with size. Coal India has a market cap of over 264,000 crore rupees. I mean, that number just jumps off the page. It immediately tells us we are dealing with the undisputed giant of this sector. This is the benchmark, this is the company everyone else is measured against. And then, on the complete opposite end of the spectrum, you have Foundry Fuel. Its market cap is just over 5 crore rupees. The contrast here is just staggering. It's not even a comparison. One is a behemoth, the other is a micro player. This single data point alone frames a huge part of the entire story. Now let's switch gears and look at momentum. Sandur Manganese, get this, posted a quarterly profit increase of over 330%. Wow, that is just explosive growth. It tells us that something very, very positive has been happening with this company, and it's been happening recently. This is a company on the move. And here is where the plot really thickens. While Sandur's profits were skyrocketing, the giant of the industry, Coal India, saw its profits decline by almost 31%. See, this is a perfect example of why being the biggest doesn't always mean you're growing the fastest in the short term. The story's getting interesting, isn't it? So let's put all the pieces together. You've got Coal India, the undisputed giant, incredibly efficient with that amazing ROCE of over 48%, but it just had a tough quarter. Then there's Sandur Manganese, a solid mid-sized player with a high PE ratio, which tells us investors are hyped, and that hype seems justified by that insane recent profit growth. And finally, you have Foundry Fuel, a tiny, tiny company that's struggling with declining profits. 3 companies, 3 totally different stories, all told by this one simple table. So, what's the big picture here? What's the main lesson? How can you apply this skill to any financial data you come across?
Well, it all really boils down to just a few key principles.
First, always look for the outliers, those huge numbers and the negative ones, like Sandur's crazy growth or Coal India's decline. They're basically shouting a story at you. Second, always connect size with efficiency. Is the biggest company also the best at making money? Sometimes, but definitely not always. Third, check the momentum. What's happening right now is such a critical piece of the puzzle. And finally, and this is the most important one, remember that one number is never ever enough. You have to combine them all to see the full, nuanced picture.
So there we have it. We've gone from a confusing wall of numbers to a clear story about a giant, a challenger, and a struggler. The next time you see a table like this, you won't just see data, you'll see a narrative just waiting for you to discover it. The power is now in your hands. So looking at these three companies, knowing what you know now, what story does this data tell you?